The next big part of this video course will be dedicated to volume profile. This is probably the most important part of this video course, so I'll make my best to explain everything in detail and give you a lot of examples and thorough explanation of everything the volume profile is good for. At first, I'll do a brief introduction of the volume profile. The volume profile is a histogram which shows volumes at price. In this picture, you can see a histogram showing volume at price. This is the volume at price. At every price level, there's a volume bar which shows you how many volumes get traded at every price level. Alright, the thicker the volume profile is, for example in here it's the thickest, then it means that at this price level, the heaviest volumes throughout this whole area got traded. The volume profile doesn't count pending orders, only actual trades that happened. If compared to volume at time, then this is the volume at time. This shows you at what times given volumes were traded. This is also pretty handy, but volume at price, in my opinion, is much more important. It gives you much more information. So the first thing you should remember about the volume profile is that when the volume profile is thick, then heavy volumes were accumulated at this price level. So in this place, at those price levels, heaviest volumes throughout this whole area got accumulated. If the volume profile is thin, then there were only low volumes. So for example, in here, the profile is thin, which means that at those price levels, there weren't that many volumes created or traded. Alright? The reason why a volume profile is so important is that you can track big financial institutions using the volume profile. And as it's written here, big financial institutions dominate and manipulate markets. Those institutions move the price. If you look at this picture, then those are 10 biggest banks, 10 biggest currency traders in the world. And if you count their market share, then you can see that it's absolute majority of all the markets. So 10 banks control absolute majority of all the volumes that are traded every day. And with volume profile, you can track those institutions. You can track their trading volumes because those are the guys who place most of the trades, who create most of the volumes in the markets. So when you look at volume profile, and the volume profile is thick at some place, which means that there are a lot of volumes, this means that those big financial institutions who move and manipulate the markets are active there and that they are entering their positions there. So that volume profile is that important because it shows what the institutions are doing. It shows us where their positions are. And speaking about those banks and big financial institutions, it's not just about currencies, you know. This is Bitcoin chart, Bitcoin wealth distribution. And basically what this chart shows is the same situation as I showed you in the previous picture. And the most important thing it tells us is that 4.11% of addresses owned over 96% of all Bitcoins. So only 4% own 96% of all Bitcoin. On the other hand, almost 96% of addresses own 3.47% of Bitcoin. What this means is basically the same thing as in the previous picture. Majority of people own only a small piece of all the asset, and very small percentage of people or companies, whatever, own absolute majority of the asset, in this case 96%. So while the institutions move and manipulate the price, they manipulate the game. And it's not just Forex, not just currencies, not just cryptos, it's also futures, stocks. It's just the same for every trading instrument. And that's why you can use volume profile for any trading instrument, because the logic is still the same. You are tracking the big institutions that move and manipulate the prices. Alright, so now you know what volume profile is and what it tells you. You also know why it is so important. And now I would like to show you a difference between volume profile and market profile, or the TPO. In the left picture, this is the volume profile. The right picture shows a market profile. The volume profile shows exact volumes at given price levels. So it's volume data. If you look at the right picture, which shows the market profile or the TPO calculation, then for calculation of this profile, you don't use volume data. The only thing used for calculation of this is the price and time. And the basic logic behind the TPO calculation is that the longer the price stays at some price level, then the TPO calculation expects that a lot of volumes were traded there. So, for example, in this place, the price stayed at those price levels for quite some time. So the TPO calculation shows that there were a lot of volumes in here. It may be true, it may not, but it usually is because the price was in here for a long time. The same case is in this place. The price was in rotation for a long time, so the TPO expects that a lot of volumes were traded there. The same goes for this area. The TPO calculation is never as precise as the volume calculation. You can compare the profiles, it's the same picture. As you can see, the volumes are heavy in this area, but the TPO is not as precise as the volume calculation. Also, if you, for example, compare this volume spike and this volume spike with this volume spike and this volume spike, you can see that actually this one is a little bit bigger than this one. If you look at the right picture, then it's a bit different. This one is bigger than this one. So the TPO calculation is not that precise as the volume profile. That's why I prefer using volume profile. However, the TPO calculation comes handy in situations when you don't have access to volume data, when you only have price action data, you only have price and time. In this case, the TPO is the only calculation you actually can use. So for example, if you don't have volume data for some trading instruments, sometimes for example for Bitcoin or for stocks, then you can use the TPO calculation and it will work even though you don't have the volume data. Also, if you use higher time frames like 4-hour charts or daily charts, then the difference between a volume profile and market profile is less significant. Alright, so for example, if you go to daily charts and you analyze stocks with the TPO calculation, then it looks very similar to if you use volume calculation. Alright, so that's the distinction between volume profile and the market profile, or the TPO calculation. And this is basically the end of this introduction video, but I prepared a little bonus for you if you are interested in how the TPO profile is calculated, how it is made. Then this is a little demonstration of it. This is demonstration of 2 candles, candle 1 and candle 2. And from those 2 candles, you create this TPO profile. You sort of shift those candles together so they form a histogram. And at this place where the candles overlapped, the TPO is the thickest. Alright, so this part of the lower candle is moved in here, so it looks like this in this picture. Alright, this is how TPO profile is made. That's why you don't need volume data for a TPO profile. It's created simply by using candles. One more example. Candle 1, candle 2, candle 3. And from those candles, if you sort of move them to the left, this part goes in here, this part goes in here, and this part goes in here, then it will create this TPO profile. The TPO profile will look like this. That's how TPO works. You don't really need to know this. It's only if you are interested how it's calculated. As I said, the volume calculation is much more important for me than the TPO calculation. It's much more precise. So I always prefer this one to this one. Alright? Because with volume profile, you are working with real volumes. Alright, so that's for the introduction video, and I'll see you in the next one.